Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about GBPJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will move to the order flow, and by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong level of previous monthly resistance, which is now turned support here. Now, as the market is testing and rejecting previous resistance turned support, we could expect more bullish price action to be created away from this area. Dropping down on the weekly, we can notice how from a weekly perspective, the market is currently testing and rejecting previous weekly resistance turned support. More bullish price action could be created away from the area, also potentially filling in the wick that we have here from a weekly perspective, because usually when you see a candle like this, the next one is supposed to fill in the wick. Going down on the daily time frame, what we can see is that from a daily perspective, the market is currently breaking structure to the upside. What we can notice is that from here we had a series of lower lows and lower highs being created. However, this is the first time that we see a break back above the structure. In fact, if the market will successfully manage to break and close from a daily closing perspective above this previous resistance would become support here, confirming that from a daily perspective, we would have once again a bullish market. And if that will be the case, after a break on the retest of that previous daily resistance turn support, that is where we would have quite good probabilities to see a potential rejection to the upside away from that zone. At that point, also completing this impulse correction and impulse pattern to the upside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the pound, what we can see is that with the last reports, net positions have started getting increased. We went from having minus 29k to now having minus 19k net positions. In the long term, however, net positions are definitely getting decreased. So the question is, will this short-term strength continue? Institutions will continue to add longs, and at that point we would have more bullish continuation, because definitely this is a strong push, which indicates that there is a good probability that with the new report, we will see more longs added here from an institutional perspective on the currency. And if we go and see what we have on the JPY, we can see a decreasing of the net positioning going from the high of minus 20k to now currently minus 27k, showing how shorts got increased on the institutional side of the market from 42k to 50k. So overall, we're having a JPY which, at least in the short term, is getting weaker, and a pound that, at least in the short term, is getting stronger. So if we will see the successful break on the retest of this previous resistance turn support, how we could be approaching a potential rejection to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things and you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here you will have the possibility to gain access to my entire all-inclusive mentorship program. As soon as you open the page, you will see that I made a video here explaining exactly what you get in it. I really suggest that you go and check it out, which is essentially all the courses, so risk management, day trading, swing trading, position trading. Also, you have the possibility to access one-on-one private mentoring, the VIP market breakdown, so the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything you need as a trader all in one interface, and also the account funding program in which you get a complete scholarship in which essentially you get your challenge completely paid from us, so you don't have to pay anything for any prop firm that you prefer once you have graduated. And if you continue to scroll down, you will see that you will have the possibility to start an application to join the mentorship program directly from the website. So I really suggest at least to go and check it out. Also, with the link below here in the description of the video, you will see that you will have the possibility to join and open an account with the forex broker that I suggest, because very often I get asked which broker I suggest. Well, you find it directly in the description. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.